Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media, generally related to three different topics: wealth building, commodities, and or financial topics. I'm going to interject my financial opinions as we go, and let's dive in there and see what people are sharing on social media. If you want to follow me at Finance, and if you want to join our community, finding-value.com, where we've got a Discord channel. We were hanging out there today for a lot of it, looking at potential entry points, sharing information between all of us, talking about those entry points. If you guys are really interested in stocks and the stock market and learning how to get really good entry points, I think we've got a really good community that can help you get those entry points on our Discord channel, which is part of the website. May Day is the coupon code if you are interested. 50% off the first month on the monthly membership, only for the first month. And we have a larger discount on the yearly membership. So I've got Finding Value. It's myself. Silver Squeeze, cup and handle projection for the big pattern. What do you think? This is what I've got. What I did is I took the size of the potential cup and the handle that's playing out. We've got a short-term downtrend line that is broken to the upside here. And we are working our way up. And if we break the large cup and handle pattern on this yearly candlestick chart, it has a projection that is somewhere around the low $500 per ounce range. We also, if you look at it from a yearly close perspective, that number comes down to the $30 per ounce area that we have to close the yearly time frame at. Now, I understand a lot of these time frames are made up by humans and the start-stop points, but that's kind of how a lot of people from technical analysis look at it. Not saying that I rely 100% on technical analysis um, for my opinions, I will say. But that's kind of the general rule of thumb. $30 on the yearly close, and on the daily close, it's going to be above 50. And big projections. Now, here's another thing I really want to talk about. There's some things that I've heard through Palisades Radio on an interview where the bankers are getting very scared of a potential shortage of the physical metal in silver. And they're flying over to China. They're trying to figure out how they can mitigate those risks of going short the physical metal because of all of the paper contracts and the size of the paper market versus the physical market. The only thing that can, I'll say, keep the paper market alive is if there's enough physical to basically circulate throughout the system to keep everyone satisfied. If there isn't enough physical to keep everyone satisfied, there could be a panic. There could be a big problem in the market, which could lead to a potential $500+ silver price, maybe. I know people want to know the narrative between why the price could move that high. The narrative will come after the chart. Once the price moves, they're going to make up narratives of why it did that. I'm not as concerned with the narrative. I'm giving you guys maybe a little bit of a bone to chew on. But this chart is signaling that something is wrong, that something very big is coming. And it could either be on the supply side of silver or on the credit side or money creation side of things. I don't know which side it's on. I'm just giving you some ideas. Here's another idea that I've been thinking about that is also very interesting. Silver and gold move together. And if there is a problem in silver from the supply side, it could expose further problems in the precious metals area. So we could see other precious metals, much like Platinum, which is also a very heavily shorted metal in the market, also moonshot as we are starting to break through some resistance levels here in the short term. Now, here's the thing that worries me. What if the entire precious metals sector rips to the upside, including gold? If we get a big move, and I mean a big move, gold $8,000, $15,000, $20,000 an ounce, the reason they were holding down all of these metals is because it is holding down essentially the entire commodity complex. If there's a problem in one of the metals and it goes short physically, that could trigger a domino effect amongst all of precious metals and maybe even commodities. Because remember all those ratio charts I always put up? What am I usually comparing it against? Usually comparing it against gold. And if gold were to go and revalue itself to a very high level, I think it's going to revalue absolutely everything in the financial markets, including bonds, including stocks, and including commodities. So I could see why the bankers are, you know, crapping themselves over a potential movement in even silver. Because I think it's going to domino across the precious metals, and I think it's going to domino across a lot of other sectors and categories as that goes. And here's another really interesting chart. This is crude oil divided by gold. And I've been watching this for a good long while, and this is what is interesting to me on. We had a big move up of crude oil outperforming gold. We had a pullback from 2008 all the way to the bottom of 2020 there. We have broken out of this three hump consolidation to the upside for crude oil, and we're doing a back test as we speak. We've got kind of that three hump consolidation back test going on here that might be complete, and maybe we start to rip here. So think about it this way. If gold is going to move upwards dramatically, what does that do to crude oil if this chart is broken to the upside and crude oil is outperforming gold? Do we get a double bottom or do we go up where crude oil outruns gold to the upside? I don't know the answer there, but I think I'm asking the right question. I think I'm asking the right question for the fact that if gold starts to roll higher and we go into a very inflationary environment, oil is the most sensitive asset to inflation, commodity wise. So I would think that crude oil would outperform gold. And I would also think that platinum would outperform silver and platinum would outperform gold because platinum historically has been more inflation sensitive to inflation. We also saw in Weimar, Germany, under that hyperinflation, platinum was priced 5.5 times the price of gold. So when I look at all this and I try to make sense of it, could we see a big inflationary move coming and silver be the prick of this entire inflation bubble thing going on that we've got going on? So here's platinum divided by gold, just so you guys know the ratio chart. It's starting to work its way on up, and I think this is going to go higher, 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 and maybe even back to levels that are way up here. I also will show you the platinum to silver ratio, which is another ratio, and this here is in a falling wedge that looks like it's trying to bottom here at any second. And so that's just incredible, the opportunities that could potentially be in front of us. And I'm not saying that this will 100% be in the bag that platinum's just going to outrun everything, but could. It could. It's a possibility. And that's where I like to see is what's the probability of it occurring? Are the market conditions correct for this to occur under? And how cheap are we? I mean, the alignment's all there. from a ratio perspective, from a market condition potential perspective there too. So yeah, and silver could be the thing that pricks it all. Coming down, crude oil to gold ratio, we just talked about that, potentially moving up there. Here's some other information here. So Japan's population has now been contracting for almost 15 years. At the same time, number of vacant homes there has been rising significantly. Now reaching the 9 million mark at this rate, Japan's demography poses long-term sustainability risks for their economy. So it's negative growth, and then you can see the vacant homes, and that's really what drives all these economies, guys. It's the demographics and population growth. So if you're looking for potential investments, look for population growth and avoid areas where population is declining, like Japan, ever since it went negative in the late 2000s. So it's whenever it starts going down like this is when you're going to get a slower market at some point. It says why they're phasing out gas-powered cars when they know this. And the study is the amount of copper needed for EVs is mining companies to produce. Impossible. I brought this up during one of our question and answer sessions. I said, what's going to happen when copper goes up a lot? Let's say it goes up to $8, $10, $15 a pound, $20 a pound, whatever it is. What occurs then? Mining companies are going to be like, well, we want to mine more copper. The ore grades of copper are incredibly low and are declining over time. And the ore grades are at a level where energy grows exponentially. Like potentially crude oil could go up exponentially against gold here, just like we've got in the charts. So copper, although it is a derivative of energy, and as time goes on, the amount of energy per pound removed from the earth is going to go up. And as time goes on, the harder to mine minerals in the earth are going to become potentially more valuable if energy goes up in price. So really, if someone can figure out a way to get very cheap energy, which humans have not really figured out ever, we've been able to gather energy from our surroundings. Fossil fuels is more or less a collection of sunlight through a lot of things on Earth. You know, carbon species and molecules and plants and stuff like that. So ultimately, everything comes from the sun, fossil fuels included, and obviously it's made through a process. I guess what I'm talking or trying to say is we've not created energy from nothing. We haven't been able to create our own mini star, aka fusion. We have been able to take things from our surroundings and produce energy from that, burning it, uranium, all those different things. But we haven't been able to create energy from nothing. Coming on down, the price of everything is mooning in the period of greatest monetary expansion in human history, and you're surprised. I was laughing when I read that. I'm like, yeah, no duh. The dollar is going to get weak here, guys, and they are expanding it massively. They're basically pumping this system to try to keep it alive, I think, to maybe even create some illusions of growth. So I think with things going on, and I think a lot of people know my opinion, I'm a big precious metals guy, and I've dug into trying to get this stuff out of the ground in terms of ore grades and all these remote small areas in terms of mines. We're going from highly concentrated mines with very high ore grades to mines that are spread out all throughout the world and very low ore grades. I don't see how this creates lower prices, but Maybe artificial intelligence, maybe technology can figure out a way to do this. I'm kind of skeptical at this time, but I could easily be convinced if there's data stating that we've figured out new ways to separate um, small traces of metals from Earth, is what I'll say. U.S. home prices, as tracked by the Case-Shiller, rose 1.3% between the February 24 and the March 24 reading. That's new all-time high. National home prices are greater than are up 2.7% above the 2022 peak. It says year over year, we're up 6.5%. And this is going back all the way to 1990. And what I'm looking at is the blue is the increase, the red is the decrease. And you can kind of see the slowdowns that occurred and where they occurred and what they look like. 1990 was a recession. It was driven by an oversupply of the real estate market. You can see some small moves lower in the slow portion of the real estate cycle. The slow portion of the real estate cycle starts in September and goes all the way through to about February. The strong portion is March, April, May, June, July, and sometimes August. So if we look, we can obviously see that there's a cycle that occurs through each year, and that there's also a cycle as you move lower where things squeeze up, like in 1998 through 2005 or 6. And 2006 was definitely the peak, and then you can see we got into some red in 07 and 08. So the real estate market was going down before the crash occurred in the stock market of 2008. It was driven by the real estate market. We also had a recession after 1990 when it slowed down here too. But that wasn't as big of a recession. And we can see that we were getting a little bit of slowdown in 2022 and 2023. That's where I was stating, maybe we're going through a slowdown at that time, but they just printed money over it. They just did fiscal spending and just drove right on over it. So maybe that slowdown already occurred. Tough to say. But we are in a strong portion of the season coming up through March, April, May, June, and so forth. So I do expect home prices to remain robust, but we'll have to watch it coming up for the fall this year, fall and winter, and see how much of a pullback we could get. A lot of talk about the uranium CEO of Boss Energy. He's cashed out 72% of his shares. This guy says, I predict investors will take some Boss Energy profits off the table. You want highly conventional mines in uranium, boring open pit models with no surprise, in his opinion. So I'm just bringing up that, the insider did sell some shares, and I think people are really overblowing this CEO selling his shares. But I don't own anything in Boss, so there's my disclosure there. But some people are kind of worrying about that CEO selling shares out. Legendary investor, I want to go over this real quick. So State recently made bold claims implying that AI is in a short-term bubble. Here's what he had to say, and what's funny is I was at a barbecue and I made the same exact comment that he did here to somebody, not knowing that I would read it the day after it. He says, if we're all sitting here in 1999 talking about the internet, I don't think anybody would have estimated it would be as big as it got in 20 years. We didn't have iPhone, we didn't have Uber, we didn't have Facebook, etc. And yet, if you bought the NASDAQ in 1999, it went down 80% before that all came to fruition. That's not going to happen with AI, but it could rhyme. AI could rhyme with the internet as we go through all this capital spending we need to. The payoff will, while it's incrementally coming in by the day, the big payoff might be 4 or 5 years from now. So AI might be a little overhyped now, but underhyped on the long term. I actually agree with that. I think we're getting a little bit ahead of ourselves. I think we need to build some of the infrastructure out first before AI really takes off. And that's where I'm at. I'm in the infrastructure picks and shovel place. I'm in the energy, I'm in the energy service, I'm in those types of areas to play it with because we flat out don't have the energy to basically grow AI at the speed that I think a lot of these guys think they can grow it at. We need nuclear. We need natural gas power plants. We need energy transmission. And that's kind of where I'm investing, just an FYI. Silver putting some distance on gold for the ratio. This is silver versus gold. You can see the big breakout here on the right. I also flipped this over for gold and silver, and you can see it breaking down um, also. So the ratio is obviously moving favorable for silver, and hopefully the momentum can continue in silver in that outperformance. Gergen says, or Gergovin, breaking, NVIDIA is now worth more than the entire Canadian stock market. Canadian stock market is 2.72 trillion and NVIDIA is 2.81 trillion. My question is, does that seem right? Does that seem like one company that makes some chips or potential AI be greater than entire countries' GDPs? I don't know. Find it weird. The bottoming process is underway, but will take time. This is global oil inventories, oil on water. So it's basically everything, and it's been declining a little bit here. Are we going to get a big decline that a lot of these guys think is coming? I tend to think yes. In the charts, I would say agree with that outlook. Tell me again about the dollar milkshake as gold, silver, platinum, and palladium rip it in dollar terms. Are we going to see a weak dollar, or are people starting to worry that cracks in the system are occurring in the bond market and or even the currency market? Or are cracks in the precious metals market showing up where there could be a physical shortage of some of these metals and the paper game is about to end? I don't know what is in store, but I'm playing it. I'm playing it big. I like silver. I like platinum. I even am warming up to palladium as it stays down here as the other metals start to move. So I don't know what the exact case will be to send silver upwards, probably into triple digits. But if I were to make a guess, I think it's going to be supply driven and the paper markets have a problem, which will then spill over into a banking problem, perhaps. And then an ungodly amount of money could be created to save the banks because the Federal Reserve is owned by part of those banks that could have problems, like Bank of America, JP Morgan, etc. So I'm playing it on the physical side. It's like let's rip these, let's rip it here. Let's rip these metals up. Charlie says U.S. home prices hit another all-time high in March, rising 6% over the last year. Affordability remains near record lows. So why are home prices continuing to go up? And I'm not saying that we're immune to a slowdown in the real estate market, but we got to see inventory go up, and it is going up. But it's got to hit levels that are at certain levels where the housing market could go down, and that could take some time. It could take some time, and in the meanwhile, we could see commodities and all these things rip as that builds inventory back up. Much like it did in 2005, 6, and 7, and then eventual crash in 8. It may take a couple of years. Maybe or maybe not. We'll see and watch it. Natural gas will soon be the primary source of energy in the United States and will be needed for decades to come. I agree with that. Look at the natural gas growth here, guys. It's ripping as coal goes down. The only thing I'll say is we're going to be highly dependent on natural gas that is highly impacted by weather. Hurricanes and all sorts of stuff could impact oil and gas production. A huge problem for the industry going forward, and few are talking about it. It will be increasingly difficult to increase global copper production as many mines are old and depleted, and new major discoveries have been in decline for many years. I read this. This is peak copper. It says the remaining copper resource lines argue that we peaked about 15 years ago. Production and discovery additions projected from 2024 onward, the two growths soon conflict. Production can't continue to grow. Is that true? Have we hit peak copper where things are about to get real interesting if this is the case? And we've got it crossing here for cumulative copper production and the remaining copper resource here in 2024, 2025. Do we have that big of a problem? I don't know. I mean, that is a legitimate question. Love to hear everyone's opinions in the comment section on that. Really do. Tavi says silver production in Peru continues to fall severely. It's now down 43% from peak levels. Together with China, Peru is projected to be the second largest producer of silver globally. Limited new supply paired with structurally higher demand is the perfect recipe for major price surges in any commodity. So this is some of the background. I know we went over earlier that silver could be launching to triple digits, and maybe this is one of the reasons behind it. I think it's a combination of credit expansion and a problem with supply. It's a combination of those two things. And here's the supply side, Peru just diving down 43% below its peak, and it peaked out in 2017. Can higher prices spur more production in silver? Or here's another way to think about it, and we just spoke about it here. Remember copper and how copper could be declining? That may also impact silver. Because if they can't yank out enough copper and have these big mines, those are also big producers of silver. I'm wondering how silver will be impacted if copper has problems producing and finding new mines as well. I don't know. It's interesting how it all kind of ties together. Here is Grady. He says that is a very good looking, huge bullish falling wedge. Means a historical sector rotation is incoming. And that means a historical lifetime opportunity is here. The chart now has a move starting bullish engulfing reversal candle at support. Do take this chart seriously. And this is the Huey or Gold Bugs Index versus semiconductors. And I thought semiconductors were the future here. And here we are with a falling wedge, big bullish engulfing in 2024, ready to move higher here for gold miners. Gold miners, 15-year falling wedge says historical sector rotation is in the making. That also indicates that we could be topping out in technology stocks, bottoming in precious metals, and going through that topping process for certain sectors and the bottoming process for other sectors. And that is that money rotation. Talked about that a lot before. We've got net length, i.e. financial demand for oil, it's at a 5-month low. Heading into a key OPEC Plus meeting and an imminent uptick in seasonal demand, which could equal 3 million barrel per day draws in July and August, leading to days of supply to their lowest levels on record by year end of 2024. We remain bullish. Net length is not in the market. We are putting in a consolidation above a monster support level. When we look at this, and you can draw a line going across here too, I think this is looking really bullish, guys. Really, really bullish. I want to go down here and go to this one that I responded with. It says vacant housing units for sale. It looks pretty low. Monthly supply of new homes is what people is saying is high. I think this is what people are missing. So the quote is, people sometimes believe that the monthly supply of new homes means active, completed homes ready to buy, but that isn't the case. In this report, 1.9 months of supply are homes completed and ready for sale, about 98,000 homes. And this is your housing inventory estimate for vacant housing units for sale. Remember, we just looked at the vacant housing units for Japan and it was skyrocketing. This here is at all-time lows. all through here from 2020 onward. We're at very low levels of vacant housing units for sale. Coming over here, we've got monthly supply of new houses in the United States. This is what everyone is parroting in Twitter and YouTube. We've got 9.1 months of monthly supply of new homes. The problem is these are not completed units. These are the entire work in progress for the new home builds. So when we look at this, we only have 1.9 months of supply, our homes completed and ready for sale. It's not the case here that we've got 9 months of new homes ready to go. So when we go and we build all of these homes, you're going to see a spike in your monthly supply of new homes by the way that they measure it. It's everything in progress. And you're going to see that spike when we go into a big housing market, bull market that we're in. So we're in the middle of all that. Just want to make sure everybody understands that. So, but that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. If you're looking for potential plays in precious metals, mining companies, junior mining companies, uranium, other sectors like oil and gas, energy service. I know it's tough to kind of start a service when the best time to invest is when no one's looking at it. So I know some people are disinterested maybe in some of these sectors, but the opportunities here and the returns are going to be ridiculous over this commodities bull market, in my opinion. So learn about it. We can teach you about the companies that are available, and you guys have to make your own decisions on what you want to do. But I think there's a lot of information on the Discord and on the website that would be useful for making those decisions. All right, guys, we'll catch you later. This is Finding Value.